Hello traders, Gary Wagner here, approximately 8 a.m. in Honolulu, making it 2 o'clock in New York. It is Thursday, 25th day of October, 2012, and this is the daily report for gold and silver. Nice showing in the precious metals markets following the digestion of the FOMC minutes released yesterday, which in essence say they are going to stay the course. Currently, we have gold up between $12 and $11 higher. As you can see, current print 1712.07, 1712 and change. That's the bid. Ask 1713, as I said, putting it up about 1060. Low 1704.90, high 719.20. Silver also showing a nice gain as we see a trade again above $32 per ounce. 32.11, 32.08 in that area. 32.21 is your ask. Puts it up about 38 cents on the day. That's almost 1.25% gain on the day. Low 31.76 and the high 32.35. You know, traders, there can be no doubt. We got into this last trade that we're currently in a little bit early. No doubt about that. We also took a lot more heat in terms of coming close to the stop than I really felt comfortable with. But nonetheless, we are sitting with a position still a little bit behind us. Aggressive traders can look to dollar cost average in this area, but that with a caveat. And the caveat right now is there's a couple of spots I really need to see this market overtake before I believe we have really confirming evidence that we're back into this counter wave or wave B that I'm looking at. This 50% mark, as you can see right here, 1719. We have gotten close. You can see that the highs are roughly within that area. However, they haven't taken that out yet. You can also see in terms of the Henkin candle, first of all, very, very short term, 360 minute on that. The nice thing is you can see that we have formed that V, that bottom, and that V did take place. And it does appear tentatively that we found good support, at least in this market, at 1700. And then I would look for it to carry back up towards higher pricing. We'll talk about exactly the areas because we do want to really address and change the upside target because we did go lower on this initial A wave. And of course, this A wave is part of a much larger intermediate wave that we have talked about. And that is wave two. The wave two, the intermediate wave two, once concluded, will take us back into an impulse. And the impulse should absolutely take out that 1800. It almost has to if it's going to be a valid impulse wave. And I believe it could come and address the 1900 area. I don't think that it will quite take out or give us a new record high. I think that that will happen on wave 5 within this particular marketplace itself. Things that I am noticing, though, we have softened a little bit, as you can see, 1711. But what I'm really looking at is the size of the candle here compared to this nice breakout. No lower tails, no lower wicks, as you can see here. We did get them on this last candle that is still forming. And let me blow that up so you have a better sense of it. You can see we now have the lower wick. Never really concerned that much about the upper wick, but it's a lower wick on the rallies and the upper wick that we really look at in terms of criteria on the sell-offs in the market. Looking at our daily chart, and the reason I really like to take a look at that chart is really it allows us to stand back and take a look at the bigger picture. And what we see with the bigger picture, and we talked about this yesterday, and I do apologize for the email portion of our report not reaching many of our traders in a timely manner. There was an issue with that. That issue has been resolved. But always realize that the video and the text as well as the charts, everything within the email that you get is typically repeated on the website itself. But as you can see, I have talked about this infinitum. I've talked about this to death, but I really believe that 1700 should be an area that holds. I felt that both psychologically as well as retracement-wise, when we look at the technicals, it's a very, very solid area. We also know that right now we've gone back into that range where that $1,800 mark has been an area that, at least for now, we have been unable to take out. So what do I believe could happen in this area? Well, what we want to focus on is this current corrective wave. This corrective wave, of course, if we take a look at our current count, 3 to 4, this is our major count here, and we are now, I believe, in a major fifth wave. Major fifth wave will take us to new highs. It almost has to play out in terms of the Elliott wave principles themselves. However, within that, we are going to have a series of 5 waves, intermediate waves. Those waves, of course, 1, 2, 3, 4, and 5, it is my current belief that we have probably traded out of the first wave in the second wave. Another possibility, of course, is that we have these long extended waves like this, and we're actually still in wave 1, and wave 1 will be a 3 count. Now, that will be easily discerned as the market continues to trade by the price action. The price action will really tell us which of those 2 possibilities is correct. Currently, I'm absolutely under the assumption that we've probably concluded a wave 1 of sorts. Anyways, we're probably in our corrective wave. This corrective wave will probably be a series of A, counter wave B, and then a final wave C to conclude this corrective part. From there, my belief, of course, is that we'll go back into the impulse cycle, wave number 3. Now, for the final chart in gold today, it's our weekly chart, straight candlestick format. And what we can see, of course, the week isn't over yet, and so we'll have to see how this ends up. But we are getting a very doji-esque or doji-like candle. Why do I say that? Very, very small body. In other words, the open and close for this week are becoming very, very close. If we get more of a sustained rally, we could even get a pure doji. And a pure doji, of course, is the open and close being identical. Now, when we take a look at it from these parameters, of course, again, this 1700 continues to be critical. It shows up on all of our charts. Nice smaller size in the candle itself, doji-like. And if you notice, dojis are an indication of a market either consolidating or setting itself up for a reversal. Here you see this ultimate consolidation, this almost shooting star-like candle, then the market comes down. We get that correction, no doubt. Now, the question is, will we see the same thing right in here? And will this marketplace now consolidate and this be our pivot point as we see a counter wave moving back up to the upside, meaning our counter wave B as we go into this market's trading activity next week. Finally, silver. You know, silver is showing us some really nice resilience. We talked about the fact throughout the entire week that I really believe that this 31.42, of course, our stops are just below there, I think 31.35. And the reason for it being below 31.35 is exactly this 50% retracement. It does appear, at least on a tentative basis, that this market, without a doubt, has found supportive activity in there. And it does appear, if you take a look at the Henkin candles, of course, shorter term, 240 minute, there's no doubt they are moving up, but you can see, just as in gold, a little bit of sluggishness. Let's see if this market can effectively close above $32 an ounce. Let's see if gold can effectively close above $17.10. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.